What's up, guys? With 2020 coming to a close, it's time for those end-of-year wrap-up lists and annual reviews. Keeping up with that trend, I've got one of my own. 3 monster growth stocks which soared in 2020 and could shoot higher in 2021. Now, before we get started, don't forget to like and share this video so that your friends and family know about these 3 stock gems as well. They could make you richer in 2021. You can also subscribe to the Investing.com YouTube channel in order to stay up to date with all the latest content. With just about a week left to go in the year, Wall Street's major averages are on track to end 2020 at all-time highs. Investor sentiment has been recently boosted by positive developments on the COVID-related stimulus and vaccine front. 2 themes which have dominated trading on Wall Street for nearly the last 4 or 5 months. The benchmark S&P 500 has climbed around 14% since the start of the year, while the tech-heavy NASDAQ composite is up 43%. Which, if confirmed, would mark its strongest annual performance since 2009. So with Wall Street closing the curtains on a blockbuster year, the following 3 growth stocks have been leading the charge higher in terms of year-to-date performance. Not surprisingly, all 3 names are also set up for an explosive 2021 thanks to accelerating revenue growth amid robust demand for their products and services. So our first name up on the list is CrowdStrike. Congratulations if you've held on to CrowdStrike shares at some point this year. The shares have been on a roll, soaring more than 350% in 2020. The cloud-based cybersecurity specialist whose technology is used to detect and prevent security breaches has benefited from the growing demand from corporations to make their IT networks more secure as more people work from home amid the current environment. CrowdStrike reported impressive third quarter earnings report at the start of December, which saw revenue jump 85.8% year over year. The cybersecurity firm said it added 1,186 net new subscription customers in the quarter. It now has a total of 8,416 total customers, up 85% from the same quarter a year earlier. So massive growth on the customer front for CrowdStrike. Taking a look at the stock chart, CrowdStrike, which started trading the year at $49.87, closed at a fresh all-time high of $224.90 just about earlier this week, valuing the cybersecurity company at roughly $45 billion. We expect the positive trend in cybersecurity stock to continue in 2021, thanks to its status as one of the leading names in the cybersecurity sector. CrowdStrike is expected to be one of the main beneficiaries of increased cybersecurity spending from businesses after the fallout of the massive hack earlier in December that originated at network management software provider SolarWinds. Our second stock on to make the list is Chewy. Chewy, which is widely considered as the leading online seller of branded and private label pet food and grooming supplies, has been a big winner in 2020. Its shares have soared by a whopping 267.9% this year. The online pet products retailer, which went public in June 2019, has benefited as its in-home delivery model mitigates the public health concerns of consumers shopping for their pets at brick and mortar retailers. Chewy's earnings reports beat revenue forecasts in each quarter this year, signaling strength even during the ongoing health crisis. The online pet products seller reported blowout third quarter results on December 8th that delivered a 45% jump in revenue. Chewy's stock chart is signaling more gains ahead. Shares, which began the year at $29, recently rallied to an all-time high of $109.52. The Florida-based e-commerce company has a valuation of $44 billion at current levels. Chewy is likely to see a boost to its already stellar financial performance in the year ahead, given the expected jump in U.S. pet spending and its relentless focus on execution and inventiveness, which has allowed it to thrive even in the competitive market with competition from Amazon.com. Highlighting the growing demand for its services, Chewy added 1.2 million net new customers in the third quarter alone. It now counts 17.8 million active users, up around 40% year over year. So similar to CrowdStrike, we're seeing high double-digit growth both in revenue and in customer additions. And finally, our last name to make the list is Roku. Roku has been one of this year's top performers, with shares rocketing nearly 165% in 2020. Gains this year have reflected rapid user expansion, which has translated into higher advertising revenue for the streaming media platform provider. If you think 2020's year-to-date gains is impressive, in 2019, Roku shares surged 375%. So we're seeing back-to-back years of astonishing returns for Roku stock, closer to the neighborhood of 500%. Roku reported upbeat earnings surprises for all 4 periods of the year, crushing expectations for profit and revenue due to strong growth in its ad-supported video-on-demand services. The streaming video platform provider reported an unanticipated profit when it released third quarter results in November, along with better than expected revenue, which soared 73% from the same period a year earlier. Roku stock, which started the year at $133.90, climbed to a new record of $361.50 earlier in December, earning the San Jose, California video streaming pioneer a market cap of around $43.5 billion. Despite the lofty gains recorded over the past 24 months, we anticipate Roku stock to extend its run higher in 2021, as the current operating environment has created a perfect backdrop for the streaming media platform provider to thrive. Roku's active accounts as of the third quarter jumped 43% year over year to 46 million. Those accounts spent a remarkable 14.8 billion hours, or 3.5 hours per user per day, streaming through Roku's content, up 54% from the year ago period. So we're seeing increased user activity, we're seeing increased revenue, as well as high growth in customer additions. Further underpinning optimism surrounding the company, average revenue per user clocked in with double-digit percentage gains in Q3, rising 20% year over year to $27 per user, indicating that Roku is doing a better job in monetizing its user base. So I hope you enjoyed this video. Now that you watched it, you are now able to make a better informed decision on these 3 stocks. Please leave me your comments if you agree or disagree with me. And if you have any additional stocks you'd like me to go over, please leave me those in the comments section as well. May the trading gods be with you. Happy New Year, everybody.